Welcome to the Quasi educational video Identifying Short-Term Trends, Part 3, Hectic Markets. This video will focus on hectic markets, also referred to as volatile markets. A hectic or volatile market is when the direction of a market moves both up and down in a very short time frame, causing wide price fluctuations and heavy trading. A hectic or a volatile market is when the direction of a market moves both up and down in a very short-term time frame, causing wide price fluctuations and heavy trading. This usually occurs with the release of important economic data and major announcements, or when key price levels are being tested or broken. The classic trading method of Quasi allows you to use multiple strategies to trade during these types of market conditions. Two of the most important elements of making a profitable trade is the ability to A. Identify trends, and B. Know how to trade them. With Quasi, identifying trends is very simple, as you only need to identify short-term or intraday trends. In a hectic market, Quasi allows you to trade in a dynamic and efficient manner, using a variety of strategies that in traditional FX trading may consider as abusive strategies. Let us look at some examples that are allowed on Quasi trading platform. Trading strategy 1. Scalping. Scalping refers to when traders try to enter the market and gain profits on a small price change by entering and exiting the market quickly. With Quasi, you may open and close as many investments as you like and as quickly as you like. Trading strategy 2. Trading both directions. Trading both directions means opening several trades on an upward and downward trend simultaneously. With Quasi, there are no restrictions as to the direction you wish to choose, and you can trade both ways. Here you can see a large move in both directions, although when referring to Quasi, it only takes a few pips to hit a large target level. In about 20 minutes, we have identified 4 solid moves in both directions. Trading strategy 3. Determining peaks, valleys, and major market moves. A peak is a high point on a chart. A valley is a low point on a chart. With Quasi, peaks and valleys can be easily determined due to the clarity of the charts. Trading the peaks and valleys is key to a winning investment. Here are 2 examples. Here we can clearly see the first price move up. If you miss it, simply wait till it peaks and trade down after it hits the first low. This is a good indicator to trade up, and the sequence follows. You can see 2 strong downward trends, followed by the end when the momentum of the down direction ends. Then 2 very obvious upward trends, which appear on a mild correction. The chart then slowly returns near the start point. This is where you can take advantage of sharp moves and reach your target levels in a short period of time. Trading strategy 4. Trading against the trend. Trading against the trend is a trading strategy that attempts to capture gains through the analysis of a symbol's momentum in a particular direction. With Quasi, locating a trend is easy. Therefore, determining how to trade against it is very simple. In this chart, we can see there is an obvious downward trend. Therefore, if I click on Buy or on the arrow up and then on Invest, I will most likely be able to hit a good target level. You can follow the trend again or wait for the next move to deviate slightly from the trend and then enter the market again. Trading strategy 5. Using a valley as an indicator to trade towards the peak. Another way of making profitable investments is by finding the valley or the lowest point on the chart of a specific symbol, and whenever that level is hit and not broken, click on the up arrow, then in the Invest button. This chart is an excellent example of this strategy. The reverse can be applied. Find the peak or the highest point on the chart of a specific symbol, and whenever the level is hit and not broken. Trading strategy 6. Select entry point to catch the best direction. In Quasi's classic method, you can try to trade every market move fast and easy with just a click of a button, and apply trading techniques that allow you to catch the best possible entry points. Here is another example of two investments. If you miss the first downward move, simply take the second one that appears shortly after as entry point 2. When you see a hectic market, however with no actual formation of a trend, it is advisable to sit back and look out for trends. But when you see a move larger than usual on the chart of a symbol that you have selected, then that's a good sign to take the trade. In this case, there is no arrow indicator on the chart, because either the up or the down investment would hit a target level on Quasi. Just select the ideal entry point and the direction you want to invest. Quasi's classic method was designed to be a dynamic, fast-paced and fun platform for trading without restrictions. When the market begins to show high volatility, that's when the power of Quasi roars into action. Quasi, a new breed of trading.